Today I want to talk about one of my favorite tax strategies, and that is the Qualified Charitable Distribution, which we also call the QCD. Now, a QCD is a direct transfer from your traditional IRA directly to a qualified charity. You have to be 70 and a half or older in order to do a QCD, but there are some very beneficial reasons to doing that. If you're a person that gives to your church or you give to other charities that you support, then by making that QCD once you're 70 and a half or older, you get some very good tax benefits. The money in your traditional IRA has never had any tax paid on it. You deferred that either into a 401k or into your IRA, and you've never paid any income tax on those dollars. If you transfer that to a charity as a QCD, you don't pay income tax on that amount transferred. The charity doesn't pay income tax on that amount transferred, so no one pays any income tax on those dollars. Not only that, the amount that is transferred can count towards your required minimum distribution if you're at required minimum distribution age, which can help minimize the amount of your RMD that is taxable on an annual basis. Plus, any amount that you've taken as a QCD does not count as taxable income. It doesn't count in your adjusted gross income that is used to calculate how much of your Social Security is taxable. It doesn't count in the modified adjusted gross income that is used to calculate how much of an IRMA will you pay on your health insurance. So by using the QCD, you're reducing the income tax on other areas, both in the income tax you pay, but in the cost for IRMA, which again is a different form of tax. So you're reducing all of those costs for yourself over your lifetime, and you're doing it by making that charitable contribution in a better way. Now, when you're thinking about that, you want to consider in retirement how much money should you keep in your traditional IRA in order to be able to make those qualified charitable distributions of the gifts that you're planning to make anyways. You don't want to convert money to a Roth that you're going to be giving to charity. It doesn't make sense to do that because you would pay tax to convert it and then make the gifts. Whereas if you make the gifts directly from that traditional IRA, nobody pays any tax on those dollars. That is much better. So you want to be able to think through that very clearly and determine what makes sense to convert, what makes sense to keep so that you can make your qualified charitable distributions from it. And that is another very good tax planning strategy for retirement. Now, like I always say, if you enjoy this content, please subscribe so that you don't miss any of the upcoming videos, because I want you to be on your best path for your retirement.